Hello, everybody. Welcome to my series, Getting to the Bag. So, this is going to be a series that's going to be designed to educate and provide some free info. So, our first topic that we will discuss for this series is the stock market. So, I've gotten quite a few questions on this. So, I just wanted to do a little intro lesson, Stocks 101. So, this is just a little introduction to the stock market, kind of some basic terms and things that you should know. So the topics that we'll be covering today is what is a stock, what's in it for the company, some key terms that you need to know, all about stock symbols, and we'll take a look at two companies and the difference between being publicly and privately held. So this is just a quote I wanted to include. It says, everyone has the power to invest in the stock market. If you made it through fifth grade math, you can do it. And this is by Peter Lynch. And I really love this quote because it just goes to show you a lot of people are kind of intimidated when it comes to the stock market. A lot of people think, oh, you have to be this educated, highly successful person to do it. And nope, as long as you made it through fifth grade math, like they said, and you can learn and you're open to learning, you can definitely invest in the stock market. So once again, welcome. I'll tell you a little bit about me. I'm Ashlee Shands, your financial coach and the owner of Financial Haven. And what I do, I help with goal setting and planning for your financial future. So that can be budget, crediting, tax preparation, insurance. So I help with, even if you just want to make a plan and you're stuck on something, I help set that up for you. So let's start with what is a stock? So stocks represent a share in a publicly held company. An example of this is Walmart, McDonald's, and Amazon. So all three of those companies do participate in the stock trading, and they are a publicly held company, which means they are traded publicly in the market. The stockholder gets to own a portion of the assets in exchange for money paid for the stock. So for example, if you purchase a stock in Nike, you are entitled to a percentage of the company's profits. So it's similar kind of how I explained it, even when talking like to my kids about it on that level, is you invest in companies you're interested in. So they love they love sneakers. So say for instance, they invest and buy a share of that stock, you're getting a percentage of the company's profits. So what's in it for the company? Why do they want to even participate in this? Why do they want to be publicly traded? Brand recognition is one. So that helps the company become a household name. So usually companies who are doing this might get involved to get more brand recognition. So by them being traded, they become a household name. Multiple people know who they are. Also, another perk, they can share the risk. So issuing shares helps companies raise money and spread the risk. So basically that just means it's not just them putting in. They have multiple investors, which will be us if we're participating in the stock market, sharing that risk. So that's one of the things with the stock market where you hear, oh, it's risky when it goes up, goes down. They're sharing that risk. So if for some reason something comes out and causes that stock to drop, we're all losing money or we're gaining money. So we're sharing the risk. The other thing is they can get money raised for their company. So a lot of times when they first get involved in the stock market, that initial period, they can raise money for their company. So if they decide to become publicly traded, they start raising money for the company. Also, along with all those things I mentioned before, if they get access to more funding in the future. So if they have brand recognition and all of those things, they definitely are going to be able to get more access to funding because all their financials are kind of public or they're required to submit financial reports. So that allows that funding to come a little bit quicker. And excuse my dogs if y'all hear them. These days with the social distancing, we got to be in the house with kids and dogs. So, all right, so here's some key terms that I would like you all to know. One of them is dividend. So dividend is part of a company's profits or their earnings that is paid as money or shares to stockholders. A share. A share is a unit of ownership in a corporation or mutual fund. So a share is what you will do when you're purchasing a share of stock in that particular company. It's called a share. Now, volume, that's the number of shares traded in a company's stock. So basically, when you're looking at the stock, it'll show the company's volumes. It'll show the number of shares at a given time in that company's stock. And then your PE ratio, that's calculated by dividing the current price per share by the earnings per share. And that's, once you get more experience, you might use that PE ratio. So the next screen is stock symbols. Stock symbols. So as you can see on the right-hand side of the screen, that shows you what a stock symbol looks like. So you'll see like their logo or their stock ticker with, the black square that says Uber. And then you'll see also up top, it'll say the name of the stock, and beside it, it may have a symbol. Like this particular time, this stock per share was $28.34. This was at the time I made the presentation, but however, I believe at this moment it has increased. So it's a little bit higher per share. So a stock symbol is a unique symbol that identifies a company's share. It may consist of letter and number combinations, and the number beside the symbol represents the price per share of the stock. So if we're looking and we're deciding to buy stock in Uber, one share of their stock is $28.34. So if you buy 4, you have to multiply $28.34 times 4, and that's what the price would be for 4 shares of stock. So it's pretty simple and self-explanatory. Now, let's take a look at these 2 companies. So one is Hershey, the Hershey company, and one is Mars. So Hershey is a publicly held company, and this is just a little bit about this company. After building his own milk processing plant 3 years later, Milton became the first American to develop a formula for manufacturing milk chocolate. They decided to become a publicly traded company. Okay, so keep that in mind. Now, Mars Chocolate, on the other hand, they're a privately held company. So the Mars family created their own company that later produced many other world famous confections, including Snickers and M&Ms, which I love, and they are a leading company in their field, but they remain a privately held company. So that's pretty interesting, right? They're both, great in their own right. Now, when you're looking at the publicly held company, like I said earlier, they have to submit financial reports to the public. They are kind of more in the public eye when it comes to that type of stuff, because we need that information to make decisions on if we want to be an investor in this company, if we want to even buy stock in this company. On the other hand, Mars, they do have to still, do their reports, but it's just a lot more private. We can't really get inside this company's head and figure out exactly what's going on. We're not making decisions on anything when it comes to the company. So you don't get as much information. Now, as far as Hershey's, one thing I do like about publicly held companies, especially if you're investing in their stock, they'll even send you sometimes like a little survey to participate in things that are going on with the company. If you're an investor, you can help be a part of the decision making. So they'll ask you what you think about certain things. You can submit a survey. You can get on the earnings calls that tells you exactly what the company has earned. So they have to be a lot more accountable to the public. So that's just a little bit on that. Now, this is just a little fun part. I came up with some questions for a discussion. I will be making a post on my Facebook page, and we'll be discussing some of these questions. So if you don't mind, write your answers in the comments for me, just for a little bit of feedback and some fun. I may do a Facebook group too, so we can all kind of discuss this. So the first question is, how is Mars different from Hershey's based on what we discussed previously? Also, just want to know, what is your favorite candy? That's just a little fun thing for me to get to know a little bit more about you. Mine is Reese's. I love it. And the third question is, how much do you think it costs for 1 share of Hershey stock? So if you can do a little bit of research, this is a little bit of homework. If you can kind of look up that and tell me in the comments how much it costs for one share of Hershey stock, I might have a prize for you. So lastly, if you would like to work with me or you have any questions, please visit www.financialhavenct.org, or you can email, and I placed my email below. Definitely open to any questions or feedback. So thank you guys so much for tuning in to this presentation. And like I said, more will be to come for this. This is just a basic intro into the stock market. And I will be updating y'all later. So stay tuned, guys. And I appreciate you for tuning in. Till next time.